Well, hello, I am at work still. Actually, I'm recording this video on January 9th, 2013. My guess is that I will not be able to upload this until at least a week from now when I'm home. Um, Most of you know, or at least most of you who follow me pretty closely know that I work um, in a rather isolated area in Utah. It's really, really beautiful. I do have internet access, but it is not good enough to either watch or upload videos. So that is why I have not made any in the last couple weeks. Um, Rather than get home and then spend a lot of time recording videos, I think I'm going to record several today. I don't have much privacy at work. I'm always with a coworker, and I try and keep my YouTube life kind of secret from them. I just assume they didn't know about it. Um, it would raise all kinds of other questions too. Uh, So he's gone today, so we're not doing very much work, and I thought I'd make a short little video here. Also, I'd like to apologize. While I was here, I set up several playlists, and I was told that by me doing that, basically those videos all showed up in people's subscription bars. I don't know if that's true. I don't know how that works. I've never noticed that happening to me, but I was told that I would do that, and of course they were long playlists with 30, 40, 50 videos in some of them. If that happened, I'm sorry. I wasn't intending it to be that way. If that is indeed what happened. Well, now that we're on the topic, I did go ahead and start setting up playlists. Um, Part of the reason is I have a lot of older videos that nobody watches, but they're on topics that people ask me about. Mr. ANCAP, for instance, asked me the other day what I thought about the Kellerman study, and I had actually done a video about the Kellerman study, and I said, well, I did a video about it right here. So uh, some of the topics in the playlist are pretty vague. There's a couple that are really specific. There's a Ron Paul playlist. There's a gun control playlist. Those are pretty straightforward. There's one on the market for defense, basically free market defense agencies, how all that works. And then there's one about bashing liberals, one about socialism, and one about more. You kind of divide those into the anti-government and then the pro-free market videos, but those are a lot more vague. They're a lot longer, and the videos are a lot longer too. So those are playlists that are probably pretty substantial. So for this video, I wanted to do a book review slash a discussion about a topic that I knew that it was a topic, but I didn't know very many details about it, and that is about banking and politics during the Civil War. Um, Most people, I think, who are into libertarianism, especially those who came through it via economic considerations, which I think is the majority. I think there's a large number of people who come to libertarianism um, primarily out of some kind of anti-Fed, anti-government spending mentality. And if you're such a person, then you're probably aware that there were some major changes in the history of U.S. financial policy that occurred during the Civil War. But if you're like me, you didn't know all that much about them. Now, the book I'm going to talk about, or that I finished reading it about a week ago at work, and it was extremely insightful and very, very fascinating and interesting for a libertarian as well as a historian, was this book, Sovereignty and the Empty Purse, Banks and Politics in the Civil War by Bray Hammond. I have a couple sources for where I get my books from. Not that I made a conscious decision that that's what I'm going to do, but just as a matter of fact, certain sources keep propping up. One would be Scott Horton on Anti-War Radio. He references several excellent books, especially regarding foreign policy. If you ever Stanley Monteith, who I don't think he does a radio show anymore, but he did for a long time. I only listened to maybe 3 or 4 hours of his radio show and probably got maybe a dozen books out of it, all of them excellent. This one, I'm fairly certain I got from the footnotes in a Murray Rothbard book. If you read For a New Liberty, there's lots of footnotes with references to other books, which I recommend that you look into. And this one I believe I got from a compilation of Rothbard's writing called Economic Controversies. The Mises Institute came out with last year, just a whole bunch of his articles and essays and whatever. And this was this was in one of the lists, and I bought it more than a year ago, and I just now read it, and it's one of those things like I can't believe I had this sitting on my bookshelf this whole time and I didn't read it. Bray Hammond, he's dead. He wrote this book in the early 60s, and he died before it actually went to print. It was still in manuscript. He was born in the 1880s, so when we're talking about the Civil War, obviously he didn't live in the Civil War or in the immediate aftermath, but he lived close enough that, you know, by the time he was closer, it was a recent event to him. It would be like me if you were born in the 80s, like I was, it'd be similar to, like, say, the Vietnam War, which means you didn't experience it, but all the adults in your life growing up did. It would be a big part of popular culture. And what's also interesting is he has 2 books that he wrote, so he's not a big author, but he was a secretary for the Board of Governors for the Federal Reserve System. So this is a book written by somebody who is highly sympathetic to the view of the Federal Reserve and the role that it serves within in government. So this is not a libertarian who wrote a book bashing, you know, an anti-libertarian piece of history, which I think just makes it more valuable. Now, the first I ever got an inkling that there was major financial changes or important monetary changes during the Civil War was the documentary that got me originally interested in economics all those years ago, and that documentary is called The Money Masters, put out by a gentleman by the name of Bill Still, who, we'll come to this later, is a major, perhaps the major proponent of greenbacks in the United States. And in that documentary, it's a good documentary, although I must disagree with many of the policy decisions they come to later in it, and some of the economics in that. They talk about how there was a major shift in policy during the Civil War. But, you know, and so I didn't understand, was there a central bank? You know, was there, what are greenbacks? You know, what was the deal? Well, let's just set the stage a little bit with what was the pre-Civil War financial situation in the United States was. And this goes into some detail in it. That era, for the 20 years or 25 years before that, is usually considered the, quote, Jacksonian era. And Andrew Jackson is famous for, quote, killing the second bank of the United States. Second Bank of the United States was the second central bank of the United States, and it was a policy goal, his major achievement by his own words, to destroy that bank, and he did. However, the reforms that his movement implemented were even broader than that. Not only was the central bank killed, but 2 years after he died, legislation was passed called the Independent Treasury Act. And this is really cool when you read it in the book, how far things have come since then. The Independent Treasury Act basically mandated that the government was required by law to pay all of its bills, everything, in either gold or silver. A dollar was defined as either a certain quantity of gold or a certain quantity of silver, a type of bimetallicism. And because of Gresham's law, I mean, gold and silver are both good monies, but if you fix their exchange rate, what ends up happening is one or the other becomes over or undervalued relative to the other, and the one that's undervalued as a money will stop being used as a money. And that's what essentially happened, is the price of I forget, the dollar was defined as so many grains of gold and so many grains of silver. I don't remember how many of each. I think it was like 371.5 grains of gold, or, you know, something like that. Someone who knows this can put it down there. It's kind of not important what the actual number of grains was, but they were set. Anyway, the price of silver was actually worth more than the dollar value of it was, and so what happened is it made more sense to take your silver and to sell it as silver or to sell it abroad than to use it as money. And so there was very, very little, or what gradually happened up until the point of the Civil War, was there was very little silver in circulation, even though that was technically money. Most of that went out of the country. He quotes several times there were estimates that they thought there were probably less than 1,000 silver dollars in the United States at the time, whereas there would have been millions and millions of dollars in gold, just because of that Gresham's law, because of that bimetallicism. I think that there will be bimetallicism in a free market. It just would be free-floating exchange rates. If you set the exchange rate, though, that's going to happen. But anyway, the government was required to pay its bills in gold or silver. So if you work for the government, if you were in the army, if you were in the post office, if you were a vendor who were selling them supplies, they were obligated to pay you in gold or silver. Now, they have the option, if they want, they could offer to give you a treasury bond, but you could deny them. So they could say, we don't have any gold or silver. Will you take a treasury bond? Which is itself just a promise to pay you gold and silver in the future, but at interest. So they'd say, we can't pay you 100 ounces of gold now. Here, we'll give you this bond, and in 10 years you can get 110 ounces. But you could refuse and say, no, I demand coin, and they would have to pay it to you. Or you could renege on the services. Secondly, the government was not allowed to keep any of its money in a bank. This is how central banks get their starts. The Fed began, and the first two central banks of the United States began by the government depositing money in those banks, and then they would use that base as the initial investment to then loan out money, and of course the fractional reserve system. So the government would give them $1 million in gold, and they end up loaning $10 million in gold at interest. The Independent Treasury Act said the federal government could keep no money in banks. They had to keep it in the Treasury, and they had Treasury warehouses put all over the place. What this also meant is that gold and silver were the only actual money, but there was lots. It was kind of unusual for actual coin to circulate. Mostly banknotes would circulate. Now, the government could not print banknotes other than they could print treasury bills, but treasury bills are just promises to pay gold or silver later, and no one was required to accept them. So someone could come to you and say, I'd like to buy your wagon, here's a treasury bill, and you could say, go fuck you. Go fuck yourself, I'm not taking that, I want gold or silver. If you were a debtor, you could not pay off your debts with a treasury bill unless the guy who you owed money said, oh, that's fine, I'll accept that, which occasionally they might. Some banks might accept it, but typically not. These restrictions on the federal government did not apply to the states, and so there were many, many state banks. And so what states would do often is they would give bonds to a bank. The bank would loan them money, and then the bank would use those bonds as the base for their fractional reserve pyramid scheme. And I should point out here, I am a member, I basically am a free banker. I don't think that fractional reserves are inherently evil. They're not fraudulent if you admit that that's what you're doing. They are fraudulent if you tell people you have 100% reserves and you don't. That is fraudulent. If you tell people that you don't have 100% reserves, that you're loaning out the majority of reserves to make interest, that's not fraudulent. And also on a free market, they can't inflate forever because there are limits. That's Rothbard and Mises, also all those guys, even when they were against fractional reserve banking, admitted that on a free market, especially when there's no legal tender laws forcing people to accept the money substitutes, the notes, that they can't inflate too much. Anyway, mostly banks would then take either a deposit of gold and silver that they had built up in reserves, or bonds from a state, say New York State or Indiana or Ohio, and they'd loan out money and they'd print out banknotes. Now, these banknotes are not actually money. They are what Mises would call money, or what we would call money substitutes. So the gold coin you have is the money, or more likely your debit card isn't money, but it's a money substitute. Maybe that's not a perfect example, but it's easier to circulate the paper. It's not as heavy and whatnot, but it would be available on demand. You go to the bank and you demand the actual money. You turn in the note. They'd have to give it to you. If they didn't, there'd be a run on the bank. Most bankers tended to view it as their responsibility to pay out on demand, and if they didn't, then they were derelict in their duties. Of course, there were unscrupulous bankers who try to get. There's a whole thing of wildcat banking, where banks would try and circulate their notes in areas where they weren't. So if you were in New York, you try and circulate your notes in Illinois. The chances that someone from Illinois is going to show up to redeem is not very high, so you can have a smaller reserve ratio. But that kind of trickery can only go so far. Basically, there starts to be a premium on trustworthy banks. So if it's a bank that always is paying on demand and is never doing any hooligans, people will accept that money at face. So if it says 1 ounce of silver, then that's what you accept it as. If, on the other hand, it's a wildcat bank that every time you try and show up, they say, oh, we moved our location, which is something they used to do a lot too. You might say, okay, I'll accept it, but I only will accept it as 60% of par. I'll charge you more because it's a substitute. It's not actually the money. So most Americans prior to the Civil War, they were either using coin or they were using these banknotes. And some of the banknotes were based on banks that were state banks that had as their initial reserve either a deposit of gold and silver from the bank or bonds from the bank. When the Civil War started, it was a bigger deal than the federal government had ever dealt with. The expenditures of the government eventually got to the point pretty quickly in 1861 to about $2 million a day. And of course, these are pre-inflationary dollars, so a dollar was a lot of money back then. The average soldier, I think, was getting paid $10 or $11 per month. So $2 million a day is a lot. And the normal tax revenue would probably have been something like $10 or $12 million a year, some ridiculously small amount like that. The conventional wisdom was that the federal government should just borrow money to fight wars. Thankfully, the United States did not have to fight very many wars, and people at the time seemed to consider that was likely to always be the case, and that the federal government would be able to borrow the money to fight the war. Hopefully the war would be brief and infrequent, and then they'd be able to use taxes to pay off the interest and the principal on whatever debts they incurred. The amount of money necessary for the Civil War was far, far, far greater than any previous conflict. However, Salmon P. Chase, who was the Secretary of the Treasury at the time, believed that's what they should do. They should borrow the money. And the normal way the government borrows money is by selling treasury bills or selling bonds, treasury bonds. But you were talking about a situation where normally in a given year they might sell 1 million treasury bonds, and in 1861, pretty soon after the war started, they were talking about they needed to have $100 million. So way more increase than they could possibly help. The market could never take such huge numbers of bonds. At par, anyway, there were people who say, okay, I'll buy your $100 bond, but I'm not paying you $100 in gold because I don't know what the chances are that I'll ever get it back. There's a civil war, you might lose. There's no real taxation in the United States. They were paying, there's some import tariffs, that sort of thing, land sales, but really a trickle. No personal income taxes, no corporate taxes, it was a glorious time. So the first couple times they tried to float bonds, they ended up selling at like 60%, which of course meant you didn't get as much money. It also meant that in the long run you would have to pay all that back in gold and silver, so the price of the war would be gigantically huge. What started to happen is Selwyn Chase came up with the idea. It wasn't just him. There are lots of people throwing these ideas out. He said, well, what I'll do is I'll pay our workers, our vendors, our soldiers, will pay them with treasury bills. So we don't have the coin. Well, first he got a loan. They went to New York, and one thing we need to understand too is the United States had this incredible it was the most prosperous time in the United States history up to this point. The gold reserves in New York City were double than they had ever been in the past. There was famine in Europe, so there was an enormous market for farm goods from the United States. This was something that basically continued through the entire war. The United States was fast becoming the richest society in history. If it wasn't the richest society in the world at this point, it was within a decade of being there. And basically gold was pouring into the country. Of course, it was being mined in California and Colorado, but it was mostly coming from Europe. There was an enormous influx of gold from Europe to buy farm products from the United States. That said, there was still not a lot of willingness to pay the government actual coin. The banks had said, well, what we'd like to do, the banks were patriotic. They said, we'll help the government. So, bad banks, I guess. But we don't want to pay you in species because we need our species to pay out our debts. We have people who have who we owe money, and they have the right for on-demand deposit. If we loan you the gold and actually give it to you, then we won't be able to meet those demands because they engage in fractional reserves. Many people argued with Chase and said, what you should do is give the banks bonds, and then rather than actually take the gold out, you should just write checks, and then people can take their checks to the bank and they can withdraw gold as they see fit or put the money in the bank. The idea was mostly people wouldn't withdraw, they would just take their checks and deposit them. But he demanded coin instead. And so starting late in 1861, in a couple of installments, he would literally go up to New York, and most of New York was by far the most important, but also Philadelphia and Boston. Those three cities made up probably 80–90% of all the financial capital in the United States. New York, because it was a clearinghouse for all the commerce that happened with Europe. And he would basically walk away each time with $50 million in gold. And he did that a couple times until it was either December of 61 or January of 62. The banks no longer had enough species to pay out species payments, so they stopped doing so. But another problem arose. They pay these people with treasury bills. They say, okay, here's a treasury bill, and it entitles the payer to this much coin at a future date plus interest. But then you take that to the bank, and they would say, this isn't legal money. You can't pay your debts off with this. You take it to go buy a wagon, and they say, look, this is a government promise to pay coin. It's not actually coin, so I'm not going to sell you my wagon based on a government promise to pay in the future. That's not good enough. It wasn't good enough for most Americans to accept that, and so they didn't. So many people in the banks and in the government began to argue and say, you need to pass a law that forces people to accept whatever it is that you issue as legal tender. The first issuance of these bonds, which normally bonds were issued in large sums, $100, $1,000, which is more than they would be paying vendors or soldiers, so they came up with a new, smaller denomination. People wouldn't accept them. They wouldn't circulate, so it was an IOU. It was like monopoly money. People treated it like monopoly money. Like, I'm not going to accept this. So the issue became, well, what we'll do is we'll issue money, and it will be legal tender, and that's what greenbacks were. Now, I didn't realize this. I knew they started printing greenbacks in the Civil War. They had 3 or 4 issues of it, a total of $450 million. The last issue was in 1862, so they eventually had enough revenue, enough from taxation and whatnot. It wasn't necessary to continually print greenbacks, which is what I always assumed had been the case. It was just 4. I think it was 4 issues. It's in the book. It was 4 individual issues for a total of $450 million. The total for the war was $750 million, so $300 million came from borrowing, bond sales, taxation, and whatnot. And then they said, you have to accept these. These are legal tender. If you have a debt, you can pay it with these greenbacks. If your creditor denies you, then they're in violation of the law. So that's what they did. And the banks liked it because then the banks could pay out these greenbacks rather than species. They always had some. They stopped redemption, but they always had some, and they kept it. Now, the interesting kind of lesson here is the very insidious effects this had. Prior to this, the American society was a hard money, gold, silver only. Government paper is worthless, is fraudulent, is untrustworthy, and the greenbacks. Many people felt that way about the greenbacks. But whenever the government does something, there are consequences. And even though the net benefit is always negative, there's always negative consequences to government action on net. There are also always going to be probably somebody who benefits. And those who benefit become a constituency for whatever the program is. Well, if you inflate the currency, and this is what greenbacks did, they were supposed to circulate as a certain amount of gold or silver. They ended up circulating at something like 60 or 70% of that. So they were discounted because people thought there's a chance these will never be redeemed. Eventually they were, but that was decades later. Um, with an inflationary currency, obviously debtors benefit relative to creditors. And so if you were a debtor, this was a system and you were able to get on the dole somehow, which lots of people were, then greenbacks were good for you. And so in the post-Civil War era, we suddenly have a greenback movement, whereas there was none before, because the people who benefited from this system that expropriated wealth, the United States would be probably more than 10 years ahead of where it otherwise would have been because of the Civil War. And not just because of the Civil War, because of the confiscatory, inflationary, financial policies of the North. And I'm not even going to talk about the South. The South was much poorer, and they basically inflated. They didn't have the gold or the exchange with Europe to fund the war, so they did it all with paper, and the result was their inflation was they had super hyperinflation, whereas the North just had bad inflation for a couple of years. Although, interestingly enough, today a Confederate dollar is worth 4 Federal Reserve notes. That's a lesson of history right there. Something like that, 4 or 5. So, and it wasn't just debtors. It was tended to be people from the West, farmers and whatnot, who really became beneficiaries of the greenback issuance, and they became people who agitated for it. Now, we never got greenbacks again. We never got strictly fiat government sending out IOUs. The man, I forget his name, who issued the greenbacks, who introduced it into Congress, as soon as the war ended, he introduced a bill that said, okay, we want to redeem these greenbacks in gold or silver, in actual money. This was always going to be a short-term emergency situation, and we're going to make good on these debts. And the attempt of the government, I believe, eventually a successful one. Again, the book didn't cover that, and I have other books about the economics of the 1870s and 80s that I've not read. So if somebody knows better, please comment below. Let me know. I'd be curious. But it's my understanding, and this is tentative, that the attempts to pay back the greenbacks actually were the cause of much of the fluctuations that happened in the period after the Civil War. Not 100% on that, though. There are also other interesting things. Another interesting character in the book who I had heard about several times was Thaddeus Stevens. Thaddeus Stevens was in Congress, and Thaddeus Stevens was the type of person who was a very strong, what we'd call a very strong minarchist. He would definitely be, a libertarian minarchist in today's society. The federal government can only do X, Y, and Z, and that's it. And everything else is, if it tries to do more than that, that's tyrannical. But he went through a very interesting transition during the course of the war. As the war started, and it accelerated very quickly, just the first few months. After the South won a few victories, and it was obvious the war would be not over by Christmas as everyone had originally hoped, the measures the government decided it needed to take were orders of magnitude beyond anything it had ever done, anything that was clear in the Constitution, anything even people like Hamilton had ever argued would even be implied. And because of their desire to keep the Union together, and basically because of their nationalism, this is when American nationalism really starts to get off the ground, they began to make exceptions to what they normally considered their principled stances. So Thaddeus Stevens, who, if we were to listen to his pre-Civil War rhetoric, he would be Ron Paul or better, comes to the conclusion by the middle of the war that we should have a dictator. Yes, sir. What's up?
You guys going into town at all?
Brian already left. Why?
What's that?
Brian already left.
Oh, it's not a big deal.
You want me to pick something up, or?
Yeah, if you don't mind. I forgot to buy toothpaste.
You care what kind?
No,
I can make a run. Do you need it real soon, or?
No, just whenever. If you're going to be running in.
Yeah, I'm going to run to town tonight and get some food, probably.
Okay, yeah, if you don't mind. Grab
Yeah.
just stick a toothpaste.
Just the one is fine?
Yeah, Colgate, whatever,
Okay.
Or whatever. Just I wrote it down, and then I got everything else but that. And then, I still have, I could probably make it through the week, but I'm just thinking, shit, it's just one of those things, you just don't like running out.
You don't want your teeth to be bad.
What else?
Yeah, no problem. I'll stop by and I'll get some of that else.
Yeah, so
That's pretty much the only
yeah,
thing.
like I said, if you get a chance, no big deal. I can make it through the week, but if you're going to be running in anyways, if you don't mind grabbing a stick.
No, no problem.
Cool. Thanks, man.
Yep. Welcome back.
Oh, yeah, it's a joy. And it turns out that I'm probably not going to see any rig move days either. I thought today I'd come back and I'd see.
Oh yeah, it's going to be at least another week.
Yeah, I thought, oh man, maybe
At
I'm
least.
going to leave 2-3 days early.
No, not this time.
They
Next
did.
time.
They did drill that. They didn't do that 9 and they didn't do that 8 3/4 all the way like
No,
they did last time.
no, they just had too many losses.
Yeah.
I guess. I mean, I heard that the fit test was fine,
Right.
and they must have been. We were losing like 150 barrels a day
Oh,
ish,
okay.
pretty much every day. It wasn't dramatic, but I
Right.
guess they were like, well, if this is going to keep up, we can't go to 3,000 more feet.
Yeah.
So. But that was Friday, man. It's been like almost a week since they TD for.
So yeah, you can't predict that kind of stuff. It's
No.
like, damn.
Oh well. Yeah, I'll run to town this afternoon,
All right.
get some food, and I'll get you some toothpaste.
Yeah. Appreciate it, man.
All right, thanks.
Okay.
Excuse me. I'm not editing that out, by the way. Where was I? Oh, okay. Thaddeus Stevens. And, what was his justification? How did he go from Ron Paul to dictatorship, right? This is one of the important lessons of this book, I think, which wasn't the idea, but I think it's there. And also it's a lesson against constitutionalism and monarchism. As laudable as I think those ideals are in a certain way, he said, look, the government's only supposed to do X, Y, and Z, but the government has the right to exist. And that means that whatever the government needs to do to exist is justifiable. So if we think the government needs a dictator to exist, then it needs a dictator, and a dictatorship is legal. And that, now as it happened, we didn't officially elect a dictator, although Abraham Lincoln essentially wielded that type of power. I'd say the only other president who ever had as much power as him was FDR. We could debate about that, but there wasn't a dictatorship. But this made the issuance of greenbacks, the issuance, the paying of treasury bills without the consent of those that are paying. Originally they had to. You could deny a treasury bill and say, no, I demand payment in gold, and they said, no, we're going to pay you with this. It is gold and silver. You just can't get it now. That was that's just one. But conscription, which again, they didn't conscript as much as they did in later wars, which amazes me given how many casualties occurred during the Civil War, that so many people were willing to volunteer. But it just shows how you give an inch, you lose a mile when it comes to the ideology of a state. Minarchism is very, very difficult to work with. And Americans did have this ideology against big government, yet if you're the beneficiary of a government program, suddenly you're not for big government in that area, as was the case with the beneficiaries of the Greenbacker program, which led to an entire movement. And then you get to this situation where, okay, I think government intervention is bad in everything, except I think it's good in greenbackers, and I think it's good in this. And next thing you know, you become receptive to ideas of, oh, well, maybe the government should do X, Y, and Z, and maybe they should, if they can help, and he mentions this in the book, people started to say, well, if they can help the slaves, if they're good enough to help the slaves, why can't they help me too? Now, it took a lot of time to resist the very minarchist anti-government stance of the United States, a mentality that is still here, although it's vestigial compared to what it used to be. It's vestigial compared to what it used to be. It's gigantic compared to what there is in Europe. No offense, European subscribers. But it's tenacious, that little seed. And again, this book is by a sympathetic person who's saying, look at all the great things the government has done, and this. He considers this before this. The author does not think that the federal government was even sovereign, that the states were sovereign, that the people were sovereign, and now we have a true sovereign government, one that people can take seriously. That was interesting detail. When they were trying to initially get loans, they thought, well, let's try and borrow money from Europe. And the European banks were like, you have no credit. The federal government was not loan worthy. And so the federal government actually talked to New York State, because New York State had better credit, said, would you be willing to go and get a loan and then give it to us? Isn't that amazing? Isn't it how how much the balance of power has shifted, the absolute reverse of that is just astounding. And the Civil War is the main initiating event in that process. Now, there was, to a degree, a return to normalcy. Salmon P. Chase became a Supreme Court justice. He was the Secretary of the Treasury during the war, most of the war up until 1864 anyway. And, he said, these greenbacks, this is an emergency. These Treasury bills, bonds that we're forcing on people, this is an emergency. This is only because it's an emergency. And you normally can't take that seriously from the government. But when he was Supreme Court, he ruled that shit unconstitutional. He said, no, that stuff was an emergency. It's not legal now. And there were lots of people who were like that. There was a horde of people who came around to believe in government powers for the Civil War. And many of those people came back to their minarchist roots after the war. But some of them didn't. And they agitated in the social movements after the Civil War. The first one that I'm aware of is the Granger movement. But these eventually develop into what we more commonly call the Progressive Era. And the Progressive Era, I think, is the point at which the growth of these interventionist federal government ideas reach a tipping point where they actually become enacted on a regular basis. So we didn't get that right after the Civil War. They didn't start instituting welfare and a draft during peacetime or even during war again until World War I. But you get that idea, and by the time you get to the Progressive Era, those ideas, having been fostered by the government, by the rich, and people think it was the little guys who were paying for all this, is absolutely crazy. They think J.P. Morgan and John D. Rockefeller are out there funding the free market people in the world. It's just absolutely silly. They were the ones who stood to benefit the most. Of all the constituencies who stand to profit from the largest of government, the mega rich are those who stand to gain the most and have the means to propagate their filthy ideology, which is exactly what they did. So the Progressive Era is kind of just like the flower, the evil flower of these innocent sounding but ultimately destructive ideas, both in terms of financially and then also in terms of just government in general. And one thing I've kind of neglected here is this established a proto-federal bank, because the other way they financed is then they said, okay, what we'll do away with the Treasury Act. We'll have the federal government can keep its deposits in banks. What we'll do, the federal government will issue bonds to several banks, and then those banks will, in paying for those bonds, will use that money as checkbook money to pay for the war. And so they selected certain banks, just as the states had done before, just as the United States had done with the First and Second Bank of the United States, except they didn't just pick one, they picked a couple, and said, your reserves will be bonds, U.S. bonds. You don't have to have gold or silver, they'll be U.S. bonds. You'll give us checkbook money. That's the proto-Federal Reserve System right there. That's when it was reborn, only with a whole bunch of other shit going on too. So, yeah, it's a little long. I'm sorry about the interruption, but it was an excellent book. Again, Sovereignty and the Empty Purse by Bray Hammond. I highly recommend it. Anyone interested in the Civil War, in economics, economic history, it was a delightful read. It quotes at length contemporaries, the debates about the value of currency, the debauchement of currency, all this stuff that we have debates about how government screws up money. People in government back then used to believe and say, which is just so amazing to me. But that's the case. Bray Hammond, if you were alive and you were watching my YouTube channel, which you're not because you're dead, he seems like a nice guy. But if the government was so necessary for the prosperity of the people, why were the people already prospering greater than they had ever done before prior to that government? If we needed the Federal Reserve System, why was this country full of gold? Why was the standard of living going up? Why are wages going up? Why was the price of labor increasing? If it was necessary, if the Jacksonian era was the era of chaos and whatnot. All we ended up getting for this was a collapsing, bloodthirsty world empire. And I don't think it was worth it.